All right, welcome everyone to gold versus Bitcoin. Pretty exciting time. Anyone know what the price of gold is these days?
41.
41 to hit.
Yeah.
41?
All-time highs, right?
Yeah.
All-time highs against the dollar. So pretty exciting.
It's the cheapest time in the United States to buy a house with gold than it's ever been.
Trick is getting the gold, right?
Well,
That's the trick.
And find someone who'll take it for a house, you know?
Yeah, there you go. There you go. So just a little bit about me. Most of you have met me already and heard about me, but just a review again. I used to be tax and budgetary advisor to a United States Senator. I was a part of the dot-com boom. I was marketing director at this stock market simulation company. And I've been a gold and silver bug since 2006. I brought in some gold and silver if you don't have any, if you want to know what it looks like, and show and tell. So, yeah, pass it around.
Well, gold looks kind of goldish and silver looks kind of silver.
It's amazing, isn't it? It's amazing, yeah. And I was trained in 2019 as a certified Bitcoin consultant, and I'm co-host with Amy here in our meetup, Treasure Coast Bitcoiners.
Wow,
So
that's impressive. I did not know that. We're so lucky to have you.
well, great. I'm glad you're here. Yeah.
Well, I'm glad you live here. And thank you for doing this.
Yeah, my pleasure. My
Cool.
pleasure.
Cool. Nice.
And he's a good presenter.
Yes.
Hopefully, knock on wood, right?
Well,
Tonight. Let's see.
He keeps our attention.
Yeah, so we're going to be talking about sound money tonight, and it's a very important concept that has mostly been lost in the world because we don't live under a sound money system anymore. And sound money is basically money that is hard to create. It's not easy to create, so it's sometimes called hard money. So I'll be interchangeably using the terms sound money, hard money, to talk about it. And some of the properties of sound money or hard money is that you actually have it. You have it in your possession. So I can say to Donna, hey, do you want to trade your glasses for this book? And then we just trade, right? And there's no authority that can really come in between us and, alter our trade. So if someone wants to give me gold for my house, we can just do that trade right there. So this is known as a bearer instrument, something that you actually hold in your hands, you bear it. I don't know why it's not called like a wolf instrument, but it's a bearer instrument. I'm just making a joke about the animal, the bearer.
Oh,
Instead of a woofer instrument. And anyway, bad joke. And so also another property is that the free market determines the value. It's not set by a government. It's not set by a corporation. We as individuals, we as a community, we as a society, we determine, what is the value of this thing through our free trade. And usually over history of our civilization, sound money has reduced down to commodities. Oftentimes in the past, we had cows were sound money. Wheat was sound money. Pearls were sound money. Shells were sound money. But over time, we found, as a species, that generally gold and silver became the most useful instruments of sound money because they have the qualities of money.
one thing that's interesting is, the Captain Bligh from Mutiny on the Bounty?
Oh, yeah.
Well, he was actually the governor of Australia, like after the whole Mutiny on the Bounty thing for a while.
There's a real Captain Quigley or whatever.
Captain Bligh. Yeah.
Oh, okay.
And he was, I guess it's called New South Wales or whatever. It was in the late 1700s, I think. But during that time, it's really interesting. They actually used rum as currency. That was the way that they would buy and trade stuff, and that was it. And then there was this rum rebellion because the British wanted to kind of stop that or whatever, and that's why Captain Bligh was in there. And so he had another a revolution on his hands after he's he got thrown off the boat and had to paddle his way to somewhere for 2,000 miles in a little dinghy.
Yeah. Rum's pretty important because how else can you be a drunken sailor without rum, right?
Yeah, exactly. But it kind of fits in with what you're saying.
Yeah. But no, like rum, the qualities of rum. Portable, yes. Fungible.
Oh.
Well, generally one bottle of rum is equivalent to one bottle of rum. Fungible means all the units are basically the same, as opposed to a work of art, which are unique, So fungible, all the units are basically the same. Is it divisible? Yeah, you could pour a glass of rum or an ounce of rum, and that's how you break it down from a bottle. Is it durable? Yeah, alcohol is pretty durable. Is it recognizable? Yeah, if you smell rum, you're like, yeah, that smells like rum, that's rum. And is it scarce? Yeah, it's relatively scarce. It's hard to make. You just can't conjure rum out of nothing. You have to go through the acquiring, what is rum made out of actually?
I think like
Sugar cane.
yeah.
There you go. That's right. Sugar cane, and you have to distill it, and you have to, I don't know what else you have to do to it to make rum. You got to do something. Anyway, it takes work. You just can't, conjure it out of nothing. You got to work for it.
But
So-
you can dilute it so that people might not know it's diluted.
Oh, good point. Good point. You're thinking ahead. I like that, Kier.
And all the sailors don't get drunk, they'll know we're going to
That's how they'll know,
My dad
yeah.
found out, but,
watered-down drink before
Right.
It's the water down some drinks.
So Kier brings up a very important point of debasement. Watering down the rum is a debasement of rum, and we'll get to that in a slide or two here. So basically, hard money is stuff that's hard to create. And the things that are easier to create, they generally went away. So just to tell a story, Native Americans, they used shells as currency for centuries. And in fact, in the South here, they still used shells, and the shells would be strung up on a string like a necklace. And then when you wanted to trade with someone, you took the necklace off and you took some of the shells off. And that was known as wampum, right? That was wampum. Give me some wampum. That's what we sometimes say is money. Have you ever heard the term, I had to shell out $1,000?
Yep.
That's where it came from, because you actually had to shell out. You had to give out the shells. And so this is how the Dutch bought Manhattan, basically through trinkets and beads.
Yes.
Okay.
That's right.
But the shells are a problem because as soon as the Europeans figured out the Native Americans valued these shiny, unusual, small little bead-like shells, what did they do? They produced glass beads back in Europe. They mass-produced these things, shipped them over here to the Americas, and started trading with the natives. And the natives were like, oh my God, this glass, they didn't know it was glass. They just thought it was this wampum. They thought it was these shells. They thought it was beautiful. And so they traded the island of Manhattan for these glass beads, basically. And so that was a money that was easy to debase because they could create more of it very easily. And so that's why generally gold and silver has been used as hard money, because it's hard to create. You have to find the gold in the ground. You got to go dig it up, which takes manpower and energy. Then you got to melt it down and refine it and smelt it. And it's a lot of work, right? I've never done it. I don't think anyone here has done it, but it's a lot of work. So sound money not only is just a useful thing in terms of trade, it also has ideological components to it. And I'll just read this quote from Mises, who's probably the founder of Austrian economics. He says, ideologically, sound money belongs in the same class with political constitutions and bills of rights. The demand for constitutional guarantees and bills of rights was a reaction against arbitrary rule and non-observance of old customs by kings. So kings in Europe, when they wanted to go to war, they would create money out of nothing. And this is what the Bank of England was created for. The king wanted to go to war, but he didn't have any money. So he put this organization, this private business called the Bank of England, into existence, and they would create the money. And that allowed the king to go to war. And that debased the currency. And that's continually what we do today. When we want to go to war, any country wants to go to war, do we ask you as taxpayers if we can go to war? Can we have money from you to go to war?
Federal Reserve.
That's right. We print it through the Federal Reserve, which is just another private bank, a private corporation. So sound money really gets to the heart of civil liberties and who is really running the world, basically. If you can create money out of nothing, if you can have easy money, you can do whatever you want, basically. And if we want to get back control of what many people consider a runaway government, we're going to need to reinstitute hard money and get away from this idea of government can do whatever they want without the consent of us, the people. So the economic advantages of sound money also, we have reduced inflation because the supply is limited. We can't create it out of nothing. We get economic stability because the money supply grows at a consistent pace. Businesses can plan in the future for how much money it's going to take to buy something. Today, if you've got money, I'm often tempted to spend it because I don't want to lose on inflation, so I want to spend it. This creates economic stability. And also, you get more savings. Like I just said, if I have money and I think it's going to lose value, I'm going to get rid of it as soon as possible. So this creates less of a consumerist mentality if we have money, hard money, that maintains its value. Okay, so what is this slide about? Anyone guess?
One,
I'm not asking for like fashion advice here for myself.
is it that 1 ounce of gold throughout
Good.
history has always
Exactly.
bought the same nice suit?
That's exactly right. So these pictures illustrate a basic fact that back in Roman times, if you wanted a custom-made men's garment, which was a toga, it cost roughly 1 ounce of gold. In the 19th century, if you wanted a custom-made suit, 1 ounce of gold. Today, if you want a custom-made suit, I don't know where you go, Saks Fifth Avenue or whatever, 1 ounce of gold basically, or around $4,000. So gold keeps its purchasing power over time, and that's why people have generally held on to gold, because they know they're not going to lose their ability to buy things in the future. It's going to maintain its purchasing power. So it can be said that gold maintains its saleability through time. We can send that value of gold through the centuries if we just hold on to it.
What do you think a nice suit in the 19th century cost back then? Probably like $20 or something?
$100, or what was the price of gold? And the price of gold was like $20. Yeah, something like that, $15 or $20. Yeah. So, as Keir mentioned, we have some problems with sound money, and particularly with gold and silver. As you saw the rounds that are over there, one of the protective features of these rounds is that they're kept in plastic, it's tamper evident. We know that no one has gotten into and messed with these gold and silver coins, because in the past, what governments did, what people who had gold did, is they actually cut pieces or shaved pieces of the gold off the coins and then tried to pass it off as a full unit of whatever that unit was, whether it's an ounce or a gram, or what was in the Bible? What was it?
Pieces of 8.
Those were the pirates, but I think the pieces of 8, I think, was an eighth of an ounce, I think is what that was.
Shekel.
Or shekel, that's modern. But anyway, whatever the unit was, and this is how the Roman Empire collapsed. That's one theory of how the Roman Empire collapsed. Is the Roman Empire, the emperors, they needed money to pay their Praetorian Guard, to pay their soldiers. They didn't have the money, so what did they start doing? They started cutting pieces out of the coins, melting those pieces down into new coins. And what does that do? That just simply devalues the value of those coins themselves. So these are generally the reasons why sound money, or particularly gold, has had problems in the past. Verification is difficult and expensive. So like you said, this sure looks like gold, but you know what? Other things look like gold too. If you don't know really what gold looks like, you can be fooled by something like brass and particularly tungsten. So if you really want to know that something is gold, you actually have to do a chemical assay. You actually have to take a little piece out of it. You have to do a chemical test, and it verifies itself. This is gold. So, and this isn't something that just even happened in the past. Modern 1 kilo and 100 ounce bars have been known to be counterfeit. And it's speculated that the Chinese have taken tungsten bars and simply coated the outside with a little layer of gold and then sold them off as 100 ounce or 1 kilo bars of gold. And this caused a problem about 10 years ago from what I remember. So we also talked about debasement is a problem. Security is a problem. So if you were someone who wanted to transport gold, say in the 10th century or the 15th century, you would have to put it in a stash, in a bag, put it on a horse, put it on a stagecoach, and you'd actually have to send it by horseback somewhere. Well, that's a wonderful target for any thief, any criminal, of course. So security is a real issue here.
Think about why this is called the Treasure Coast too. The Spanish ships that sunk off the coast, and they were carrying gold.
Great point. Yeah, that's right. I saw there was just a recent find, wasn't it, down in Jupiter? They just found a whole bunch, $1 million worth of silver.
I
Yeah,
didn't see that.
yeah, that was recent.
Morning
Yeah.
beaches.
So, and that's to the point, transportation can be difficult. Ships sink, things fall off the backs of trucks. It's just difficult to move things across across large distances. And during the times of the Crusades, when Catholics were supposed to go visit the Holy Land, they had trouble moving their money, their gold, over into Israel, into the Fertile Crescent. And that was actually one of the first banks. So you would be able to have a ledger of a marking of how much gold you had at your home church, say in France. And then that piece of paper would then accompany you to the Fertile Crescent, Israel, Syria, Lebanon, Egypt, wherever that is. And you take that to the church, and the church says, oh yeah, you do have money with us, the church. And then they'd be able to then buy food for their 3-month pilgrimage or whatever it was. So what would you do with the gold when you held it back home? Well, it would have to be somewhere safe while you were gone. And so that led to the storehouse, the place where you would have armed guards, high walls, moats, all sorts of security features to keep your gold safe. So that was the storehouse. And you would put your gold there. And so you would drop your gold off and you'd go home. But before you went home, they'd give you a little piece of paper, a little receipt, right? And that was the receipt. And that turned into money eventually. And this centralization of the gold led to rehypothecation, which is a sophisticated way of saying they printed gold. So the owners of the storehouse figured, well, you know what? I have all this gold here. In the next week or in the next month, I bet you 80% of the people aren't going to come back for their gold. So you know what we can do? We can lend that gold out to other people and earn interest on the gold sitting in our storehouse. That's rehypothecation, is lending out someone else's assets that's in your custody. And that's a problem. And that is what leads to bank runs. When you don't have all the money in your bank and then people come asking for it, the bank goes bankrupt. And that happened throughout the 19th century, throughout history, in fact. And then finally, today we have fiat money, which is paper money, which are the receipts from the original gold storehouse. And that creates money printing, because then you're tempted just to create money. And that is basically debasement, because you create more gold, you create more receipts, you create more and more and more, and that simply dilutes the original value of your paper receipt, of your money. So a lot of problems with gold. And this is basically why gold is not money today, because it's been hijacked by the money printers, by the people at the central banks around the world. They create money out of nothing. We have lost this original idea that gold was money, and this paper once represented gold. The $20 bill, the $100 bill, the $1 bill. It's
supposed to be redeemable.
It was redeemable at one point.
1971.
Before 1971. Good history, and we'll get into the history a little bit.
I lived it.
Only for governments. I think it stopped being redeemable for gold back in the 30s with FDR.
Right, yeah, we'll get to that. We'll get to that. But anyway, so inflation is what resulted when we left this sound money system and we moved into a paper money, a fiat money, which is just a conjuring up of money. It becomes soft. It becomes easy to create. We can print more paper very easily. And so since 1913, during the Federal Reserve was created in 1913, we've lost about 97% of the purchasing power of our dollars. 97%. That's what inflation does. It takes away our power to buy the things that we need to live.
What's the last thing on there about the McDonald's? Okay.
Good question, Amy. So this is the tangible effect of inflation, is that the price of a Big Mac doubled from 2004 to 2022. I didn't have a chance to look up what a Big Mac costs today, but it's probably around $8 or $9 would be my guess. Anyone get a Big Mac lately? All healthy people here. Good for you.
Vegetarian.
Good.
A veggie burger has gone up.
Yeah.
And they are about $8 at Burger King.
All right, Tim's going to look it up.
So,
Okay. So yeah, inflation is just not an abstract idea to most people, and most people have to shop for groceries or buy food at restaurants, right? So you can see the effects of inflation very clearly. So why did we all of a sudden just give up our idea of money as being hard, money being gold, money being silver? Why did we give it up? It was basically because of convenience.
$4.99.
Oh, $4.99.
Hasn't gone up much.
Wow. Okay, that's surprising.
Less beef.
That's not what I'm seeing. I'm seeing anywhere between $6 and $8.
Okay, so it's gone up.
Just looked on the app.
I know.
Anyway.
No, I know.
Oh, really?
Hopefully it's me.
Maybe that's for a Happy Meal Big Mac. Yeah, kids meal, right?
Yeah, maybe the Big Mac is going like this.
Yeah, shrinkflation, right? That's another way to get around it. So gold failed because of gold's original failings, right? It's difficult to transport. It's difficult to verify. We're still subject to debasement. Security is a big hassle. So we gave up the sound money principles for the convenience of the paper money. It's so much easier to carry paper around. It's more transportable. It's easier to secure. You can hide it better. And this is just what happened. And so Bitcoin comes around 16 years ago now, 17 years ago. And Bitcoin, as I'll show, it has all of the features of gold and none of the drawbacks. You can transport Bitcoin around the world in minutes. Can't do that with gold. You got to put it on a ship. You got to put it on an airplane if you want to send it around the world. Bitcoin is open, just like gold. Anyone can buy Bitcoin. It doesn't care what religion you are, what country you're from, what race you are, what religion, anything. And Bitcoin is actually scarce. It's more scarce than gold, and we'll get to that later. Bitcoin is also divisible. We can break it down into units as low as 1/100 millionth of a Bitcoin. And we have a fixed issuance schedule. We know exactly how much is going to be created every day, every year, every decade. And it's fungible. One Bitcoin is the same as every other Bitcoin, is the same as every other Bitcoin. So Bitcoin, just to go over some of the concepts of what Bitcoin is for new people here. So Bitcoin was created in 2008 in response to the great financial crisis, the great mortgage crisis, the financial corruption between the rating agencies and the bond issuers on Wall Street. And it was created under a fictitious name named Satoshi Nakamoto. And nobody knows who Satoshi Nakamoto is. And Satoshi Nakamoto disappeared in 2011. So this person or persons have gone. And in a very strict sense, Bitcoin is a peer-to-peer electronic cash system. So peer-to-peer asset is another word for what? It's a bearer asset, another bearer asset, peer-to-peer. I trade with Donna, Donna trades with me. This transaction is then irreversible, basically. No authority can get between us because we made the trade, okay? Bitcoin is provably scarce. It's written into the code that there will only be 21 million Bitcoin ever. No more ever can be created. It is censorship resistant using cryptography, which is the same technology that we use to buy things on Amazon, to operate our bank accounts, how the military keeps secrets, etc., etc. Bitcoin is open. It's decentralized. No one controls Bitcoin. There's no company in charge of Bitcoin. There's no government in charge of Bitcoin. Bitcoin has no ruler, has no single owner. And Bitcoin is a bearer asset with no third party keeping track of who has what. We make the trade and it's final. It's done. And Bitcoin is kept on this big ledger that is stored on my computer. It's stored on Amy's computer. It's stored on computers all around the world. Everyone has a copy of this ledger that has a private key with a public key. So this is known as the blockchain. And the blockchain is made up of blocks, and every block is made up of thousands of transactions. And the transactions are records of me sending Bitcoin to Donna, and Donna sending Bitcoin to Amy, and Amy sending Bitcoin to me, and on it goes. And these blocks are created roughly every 10 minutes by miners who are incentivized to create these blocks by doing some cryptographic work. And these blocks are basically final. There's no rollback. No one in the world, no government entity, no authority can roll back these transactions. It's final. And the whole thing is kept secure through cryptography, which is an advanced form of mathematics.
So am I hearing you say both you and Amy have nodes?
I have a node.
And you have a node? Okay, that's what I thought I understood when you were talking about the two of you. Okay,
So
cool.
what about when they get all 21 million, there's no mining left, how are they gonna get incentivized to prove the ledger?
Yeah, it's a good question. So with every new block, there's a reward for finding the block. In addition to the reward, there are the fees that are paid to the miner that incentivize the miner to put a transaction into a block. So it is hypothesized that in the year 2140, when the last Bitcoin is mined, that the fees will be large enough to incentivize the miners.
So the fees have been increasing to a transaction?
The fees fees have gone down the last few years, but the block reward subsidy today is 3 1/8 Bitcoin. So that's like $400,000 every 10 minutes is awarded to miners.
Now, what's it cost you to get to mine a Bitcoin?
That has to do with the cost of electricity and the cost of the computer miners.
What would it cost you think?
About $80,000, $75,000, and that's why people get into mining.
And that's including the cost of the computer hardware and software and energy?
Yep.
Here in Florida?
Well, not here in Florida.
No, you have to have a cheap source of electricity.
Right, and that's generally where miners set up shop, is in cheap source of electricity. So Texas, Iowa, Iceland, Paraguay, Ethiopia, places that have cheap electricity.
So a new entry is a new Bitcoin? A whole Bitcoin? Or no, what is an entry?
So the transactions are the transactions between us when we send Bitcoin to each other. Now the reward for making a new block is 3 1/8 Bitcoin plus the fees. That's the reward for the miner. That's the incentive.
Makes sense?
No.
Okay, so,
So a new entry
So when
is
we-
created.
yeah,
by
so
a miner.
when general people are using Bitcoin to transact, they create a transaction, and then what they do is they submit the transaction to a, what would you call it, like a waiting area, and they have to be then actually written into this immutable ledger, and writing it into it is like it's like creating an entry in a database, and that database is distributed through everybody that runs a node. So in order to make sure that that transaction is valid, like nobody's spending a coin that's already been spent before and all these other things that are part of the rules, the miners and the nodes look at all that. That's requires some electricity, and then the miners want to compete with one another to be the one to actually take all those transactions that have happened in the last 10 minutes and create the next block, because all the transactions are like part of a block. And in order to decide who's going to get that reward and who's going to get the privilege to write that next block with all those transactions that have been gathered up, they have to do this thing that uses electricity. It's like it's a proof of work mechanism, and whoever solves it first, they get the privilege. They get to write the block, and everybody else gets to validate it, make sure all the transactions that are in there really are good, you know. And then by virtue of the fact that they've won that right and they write this to the block, they also get this reward, which currently is 3 point whatever Bitcoin.
3 1/8.
3 1/8.
So I have to spend 300 grand, and if I solve it, do I have to share that with anybody?
No, that's yours as a miner.
But it's a race to get there.
It's a race every 10 minutes.
Yeah.
I mean,
So how do you determine if I have the wherewithal to fill this room up with servers and buy the electricity? How do I beat the rest of them?
Yeah, it's competition. It's random. So the work that the computers are basically doing is looking for a random number that unlocks a cryptographic puzzle.
Yeah.
That's basically all it is. So these computers, they have a single function, and that is to run this hash algorithm.
Right.
Does this number work? No. Try this one. This number work? No. It does this trillions of times a second. And there are hundreds of thousands of computers around the world doing this all at the same time.
Yeah.
And the number right now, I think it's something like 27 digits long. So it's a very big number that they're looking for. So it's whoever finds this number first, and that's just randomness.
So the chances of me spending 300 grand and getting those servers is probably slim to none that I'll have enough horsepower to win the race.
It is, and so there are pools that have been created where people
Okay,
pool
so you
their.
can join the pool?
Yeah,
Yeah.
you can join the pool, and then you get a share of the reward based on the share of compute power you put into the pool.
And can you see their historical win rate?
Yes, you can. You can see exactly every block that the pool found. It's noted.
What sets some apart from the others, do you think?
That's a good question. So there's a big debate right now. Well, there's been a debate raging for a long time that mining pools are becoming centralized. In other words, there's only 2 or 3 very large pools in the whole Bitcoin ecosystem. So there's a movement towards decentralizing.
Yeah. So where are the big ones at now?
China.
Yeah.
Yeah.
So big ones here in the States, huh?
There are several here.
Yeah.
And like the one that I mine at is called Ocean Mining. And they're pioneering a decentralized block template, which is a further effort to decentralize mining.
Mm-hmm.
Because right now, hardly any miner creates their own block. They just use this method of constructing blocks from somebody else.
Right.
And so that's like another centralization, that's another choke point that can be corrupted.
Right.
So anyway, we're getting into the
Yeah, we should do a whole thing on mining.
we're getting into the weeds here. We're getting into the weeds here a little bit. This is supposed to be an overview of Bitcoin.
Yeah.
So is
And
China getting most of the Bitcoins now then?
no, because they banned Bitcoin like in 2021.
Oh,
They banned it.
okay.
And so all that hash power, it went to Russia, it went to Canada, it went to the United States, it went to
Oh.
Kazakhstan, I
And
believe.
you said when he asked you the question, where were the big miners?
Yeah, you said China.
China's still, Antpool is still a very big.
Oh, I
Yeah,
bet,
so they
I
are
bet
getting
they
a lot
still.
of, they are getting a lot of bitcoins.
Yeah, if I'm in the Communist Party and I've got shares in the Bitcoin, they're still farming it.
Oh yeah. It's just that China used to have about 50% of the hash power in the world. Now it's down to like 20% because they banned it.
Oh, okay.
Which is a good thing.
Yeah, it's a good thing. It was really a good thing for us.
1% they could take.
And out of
Yeah.
21 million, how many are made?
We're almost at 20 million right now.
Oh, okay.
Not much left. But yeah,
So take the 2140 to get the rest of it.
exactly. And we'll get to 95% of all the Bitcoin mined in like 5 years. So the next 5 years is really our only opportunity to get Bitcoin, in my opinion. After that, it's going to be tiny, tiny fractions. Okay. So just an overview, really quick. You receive Bitcoin through a public address. The QR code on the screen is an example of a visual QR code, a public address, but a public address is something like the one I have on the screen here, BC1, blah, 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 blah. It's basically a representation of a 256-bit number, and it's zeros and ones 256 times. But that's a very long, piece of text, so we can break it down into smaller, and that's what this BC1 address looks like. And then the private key is how we unlock the Bitcoin on the blockchain. It's how we get to it. It's really what's the valuable part of Bitcoin. And through this private key, we can send Bitcoin anywhere in the globe to anyone who has an internet connection or just electricity for that matter, to receive Bitcoin and receive value. So Bitcoin solves the problems that gold had. Gold was not saleable through space. Gold is saleable through time. In other words, gold kept its value over time, but we don't have gold over distances. Very difficult to transport value over distances. And that was one of the reasons why fiat money became so convenient. Banks could call the bank in Switzerland and say, oh, this guy needs money in New York tomorrow. Okay, they just send a telegram or an email message today, the SWIFT system, and said, okay, he needs money over here. But with Bitcoin, we keep the hard money principle, and you can still send it very quickly over great distances. And also verification is very easy. If you run a Bitcoin node, you don't have to worry about if your Bitcoin is real. Is it true gold? With gold, we have to assay it, and there's always the risk that we run of counterfeiting and shaving and all the other debasement problems. So running a node is really the key to verification of our Bitcoin, and anybody can run a node. So this is a graph that just basically shows the point of where Bitcoin fits in between the salability of gold across time and the salability of fiat paper money over space, like I just described. Bitcoin does both. And the issuance rate of Bitcoin is something that we've been talking about. There are only going to be 21 million Bitcoin, and the issuance rate gets cut every 4 years in Bitcoin. So like I said, it's 3 1/8. 2 years ago, we had 6 1/4 Bitcoin being distributed every 10 minutes. And this 4-year cycle is known as the halving, where the supply gets cut in half. So currently, Bitcoin is growing. The supply of Bitcoin is only growing at a little under 1% a year. And in 2018, we're going to have 2028, we're going to have the next halving, which puts it at half of that, which is just 0.4%. Now compare this to gold, which has, over the millennia, the supply has grown about 2% a year. And the US dollar has grown at almost 10% a year. So the debasement rates of fiat money and of gold are much greater than Bitcoin. And Bitcoin is just going to get scarcer and scarcer and scarcer because we have these halvings every 4 years. So the issuance schedule just gets better and better and better. And this is probably one of the greatest arguments for why Bitcoin keeps going up in value, because it's getting scarcer and scarcer and scarcer over time. It's not an accident that Bitcoin's value grows. So we're getting to the timeline here of money. And in the 19th century, largely the world adopted a gold standard. It wasn't an edict from something like the United Nations. It was independently, countries adopted the gold standard because they saw it was the best money. It was hard money. Individuals and companies doing business all had the gold standard. One exception to this was actually China. And China was on a silver standard. And one of the ways that the British Empire was able to more or less enslave China, in addition to gunship diplomacy and the Opium Wars, was they were able to basically rob China of all of its natural resources and its ivory and its beautiful artwork by paying them in silver, because silver was much easier to acquire and was much cheaper for the British than having gold.
And they were also forcing China to buy opium in exchange for gold or whatever.
But the fact that China was on a silver standard put them at a great disadvantage as well, in addition to the Opium Wars and the gunboat diplomacy. So we started leaving the gold standard in 1913 when the United States created the Federal Reserve through the Federal Reserve Act. And that granted the permission of a private bank to create money that was redeemable for gold. It actually said on our dollar bills that this is redeemable for gold at any bank. You could actually go get it. Then in 1933, Executive Order 6102 was issued by Franklin Roosevelt that basically said all private individuals had to turn in their gold. You would no longer be able to trade your dollars for gold. Governments would still be able to trade their money for gold, but for individuals, for private citizens, this was no longer possible. So from 1933 up until 1971, we had kind of a dual system. That's why the chart shows green and gold. And then in 1971, Nixon took us completely off the gold standard when the French sent a big boat over to New York wanting their gold back. Said, we don't trust your American system. We don't believe in your system anymore. We believe you're printing too much money. You're debasing the money. We want our gold back. Nixon said, sorry, can't have it. We're temporarily closing the gold window. You can't get it. We'll let you know when you can get it back.
And I think this is a good point too. The reason why people for so long had gold as a sound money, it's a trust situation in a way, right?
Yeah.
Because you know that everybody recognizes gold. Yeah, you still have the issues of it being counterfeited and all that, but you don't have to trust someone that there's something of substance there when you're making the exchange. And what's really kind of infuriating is that 1933, we were on the gold standard and you were supposed to be able to take a greenback and redeem it for however much gold. And then the government tells us, no, you're not going to be able to do that anymore, citizen. You're basically going to have to trust us that this fiat currency, that this paper currency is just, it's going to maintain its value. But we're not going to give you the ability to exchange it for a hard asset, and you're going to have to pay all your taxes and all of your other stuff, everything that you want, you're going to have to pay in this paper money. Oh, and by the way, if your house goes up in value and you sell it later, then you're going to have to give us capital gains tax.
Right.
It's like, what the?
Yeah. So the government creates inflation and then they tax you on the inflation.
I know.
Yeah. Yeah. So that's the problem with all fiat monies. That's what Satoshi said. The problem is that it requires trust.
Yeah.
And throughout history, there's been no government that's been trustworthy. All governments debase their currency if they're able to create it out of nothing. That's just the history of humanity. So, and that's
It's
why.
kind of surprising that that there wasn't more of an uprising when that happened.
The convenience of paper money. It's the convenience. Yeah, we didn't hold the line. Our great-grandparents, our grandparents did not hold the line. We did not revolt and say no.
And 33 was the Depression.
Right, and that was part of the rationale. We are under extraordinary emergency conditions, emergency economic conditions right now. We have to suspend the redemption of gold. It's temporary until we get through the emergency.
Well, there's also this whole thing, and this, maybe if we have time, we can talk about it later, but there is this idea that we live in a debt-based economy, and it's debt-based in order to foster economic growth. So for the economy to grow, and it needs to grow by a certain amount every year, you have to have.
That's the modern debt-based monetary system.
Yeah,
that's the
part that
Lynn
always kind of confuses me is that, like, if we were to go over to a Bitcoin standard where Bitcoin is a fixed supply, would that shrink the economy? Would the economy no longer be able to grow? And so I don't know if we can get into that, but I think that's something that, you know, the economists kept telling everybody, and I think that's part of the reason why we all said, oh, all right, we understand.
We'll trust the experts.
Yeah.
Right. And so the 19th century is a great example of how the world operated on a gold standard. It operated under so-called the fear of deflation. But what was the 19th century? It was the Belle Epoque. It was the Gilded Age. It was the beautiful time. We invented electricity, automobiles, airplanes, telegraph, industrialization. Was all built and financed under a hard money system. Mm-hmm. So it's really an economist's lie that you need to have an inflationary debt-based currency in order to have economic growth. It's just a fallacy. It's just not true. Liars, exactly. So what I'm suggesting in this slide is that we're in a transition right now from a fiat-based monetary system, which we're currently in right now, into a Bitcoin-backed monetary system. A new gold standard, but that's going to be backed by Bitcoin rather than gold. And I believe that's where we're going. And that's ultimately what Bitcoin was built for. It was built to take down central bank money printing, soft money, bring us back into a sound money, hard money system.
So what happens when you make capital gains on your Bitcoin?
You pay the capital gains tax.
So they still got you.
Still got you in fiat currency, exactly. So Bitcoin is just replacing gold. That's the way I look at it. And it's just like, Google replaced the phone book. I think we're all old enough here to remember phone books. They would arrive once a year right at the doorstep, the big things. And I, as a kid, I'd always check to see if my family was in there. I'd check it out. I'm like, yeah, I'm in the phone book, yeah. But of course, we don't have phone books now. Why? Because we've got digital information. And Bitcoin is the same thing. And this is exactly how the world has operated in the last 20 years. Everything has been digitized, right? Everything that we use now once had an analog component, everything. And Bitcoin is doing the same thing to money. We're just moving to a purely digital sound money system rather than, an unsound money system, which is our dollar system. So this was interesting. I'm a big fan of Buckminster Fuller, and I found this quote of his that he said in a video interview that wealth isn't gold, it's energy. And by the year 2000, there will be a scientific accounting system for wealth aligned with the laws of physics. Now this is...
Did that say 1967?
That's what he said in 1967.
Okay,
yeah. So this is amazing. He prophesized, he had the vision to see that something like Bitcoin was coming. Mm-hmm. He was only off by 8 years. He says, by 2000, we'll have something that honors the laws of physics. That is an energy-based currency. Because wealth isn't gold. Gold simply represents the wealth. Real wealth is the storage of energy. That's how we mine Bitcoin. We expend energy. And we store our energy in Bitcoin, right? We've worked for years. We did something, we worked. And for exchange, we got money. And so we want to store our energy in the time that we invested in money. But we don't want to lose value in that money. We want a hard money. We want a sound money. And then just this morning, Elon Musk tweeted this on the right.
Wow.
Just this morning. I have the timestamp.
That's crazy.
And he was responding to another comment, but he goes, true. That is why Bitcoin is based on energy. You can issue fake fiat currency, and every government in history has done so. But it is impossible to fake energy. And that is what you need to create Bitcoin. You just can't create Bitcoin out of your head. You can't press a computer button and instantly have 10 Bitcoin. It takes time and the spending of enormous amounts of energy to create Bitcoin, and that is what backs Bitcoin.
You must have known that we were going to do this presentation tonight.
Well, you know, Elon and I are pretty tight. You know, we text all the
That was
time.
nice
Right?
of it, huh? Fits right in there.
Yeah, that was pretty amazing. Yeah. So the evolution of money, physical possession. I got something. Donna's got something. We trade physically in the flesh here, in the real. We trade it. Then we get to the fiat money. No, you can't get the gold back for these pieces of paper. You're going to have to trust me, bro. You're going to have to trust me that we got the gold. We're not debasing it. Just trust us. All right? And now we move into a Bitcoin world of money where it's based on mathematical certainty. We're based on the laws of physics. We're backed by energy, the most precious thing in the universe, in addition to our time. So the only question is, where do you want to store your saved up time and energy? You want to save it in some depreciating asset that's debased every year, every month? Or do you want to put it into the best energy-backed currency known to man? And like we said, gold hit 4,100, 40 or something today.
So what's your take on why gold is doing so well and Bitcoin had that recent dip? And you know,
Yeah, that's a bigger question. But basically, gold is indicating that there are serious cracks in the system, in the existing system.
right?
The fiat system is breaking down, and people are going to gold. And it's just because, so gold is telling us where we're going. Bitcoin is going to build the road to get there. Gold cannot bring us back into a hard money system. It can't. It failed before. We have no new inventions, no new technologies solve the problems of physically moving atoms of gold across the planet. We don't have teleportation yet, right? We don't have the Star Trek beam the gold somewhere, right? We don't have that yet. Gold still has the same old problems, but the mindset is still there that when our world is crumbling, what do? We buy gold. So I think that's why gold is going up. And Bitcoin is only held by 100 million people out of 8 billion in the world.
Right.
So it's just not this knowledge of what Bitcoin is. Most people still think it's a scam, right? It's a Ponzi scheme. It's used by criminals, drug smugglers, et cetera, et cetera. Yeah. So the knowledge of what Bitcoin is just isn't evenly distributed
Maybe
yet.
it's also more liquid or something. So when there's a shock, people want to liquidate their assets for whatever reason, and it's easier to liquidate like Bitcoin and stocks than it is to liquidate.
And Bitcoin didn't go down that much.
The other thing, gold's total market value is between 25 and 30 trillion. Bitcoin is 2.
Great point.
So
I got a slide on that too.
Gold.
Yeah.
Well,
As they're diving away from the fiat currency that's failing, more people are going to head to gold.
And
Which is the price of gold.
And there's other uses for gold too. It's not just a currency. So,
What other uses?
well, it's an industrial metal.
Not really.
Well, silver.
Silver is an industrial metal, but not gold. Gold is really jewelry. Most gold is around women's necks and on their ears. That's where most gold is, really. Very, very small industrial use. Very, very small.
Integrated circuits, I think they used to use little gold. I don't know if they still do.
It's really tiny. Really, really tiny.
They wrap a
Mark?
gold blanket around cameras that are shot out into space to protect them.
We got another astronaut here, it sounds like, or an astrophysic guy here.
Just a little fact that I know. I
Alright.
don't know anything else about space.
We got other people here around here who kind of worked at NASA and things like that. So
I heard at one time that there was a fixed amount of gold, basically the size of a baseball diamond, a cube.
swimming
90
pool,
feet.
swimming pool.
Yeah,
An Olympic-sized
90
swimming
feet.
pool would contain all of the gold that's been dug up.
Really?
An Olympic-sized swimming pool.
What is that?
How come Fort Knox is so big then?
Gotta have a lot of beefy guys, you know.
That was my next question.
Well, Fort Knox just isn't gold.
Oh,
There's
yeah.
all kinds of other things.
What's in
Okay.
Fort Knox then?
Only, who knows?
Who knows? Still no audit. So anyway, let's move on.
I thought that's where they kept all the gold.
That's what they say. You gotta trust it. You gotta trust them.
But they're still
California.
But they're still
Well, I
mining
mean,
new gold
I
though
see
too.
Yeah, yeah, yeah.
pictures.
Right in the middle of Beverly Hills.
So maybe that's changed. Maybe the amount of gold is still increasing.
Well, that's also one of the problems of gold is that we have no idea how much gold exists. And Elon Musk had talked about saying, oh, there's going to be an asteroid coming into our solar system that has trillions of tons of gold. What would happen if Elon Musk was able to bring that asteroid to Earth and then mine it? What would the price of gold do? It would collapse.
Yeah, well,
They're also
obviously-
beginning to make gold,
So the
like they
industrial,
did with diamonds. It's
Really?
a process. It's not too far off in the future. It's expensive to do right now.
That's alchemy.
But
Yeah,
really?
the industrial use of gold in 2025 was 10.3 million troy ounces.
Ounces. That's only ounces, though. Yeah. So gold has done very well over the last 5 years, and gold has generally been a better investment than stocks historically. So I don't say that gold is a bad investment. I don't believe that. And like I said, I've held gold since 2006. I still hold gold.
Has it been a better investment than stocks if you look like a lot further back?
Well, I mean, last 25 years, it's certainly done better. So, I mean, that's pretty good.
Better?
Yeah, it's a lot better. It's hard to believe because gold is just a pet rock. It doesn't do anything. There's no story behind it. There's no new technology. There's no wonderkind CEO to talk about, you know. It's not exciting to say, oh, I own gold at a cocktail party. Oh, you know, I own gold.
Yeah.
It's like a big deal, you know.
What do you do?
Because it's been money. It's been hard money
People have
for thousands of years. Thousands of years. We know what is valuable. It's like in our DNA. Some people say gold's like in our DNA. We know it. Okay, but to me the question is, do you really want to be buying gold right now?
No.
Do you really want to be buying right now? It's an all-time high.
I don't know. Some people say it's going to go up to 10,000.
Yeah, well,
Someday maybe.
maybe, but
How about silver? Huh? Do you remember the Hunt brothers?
sure do.
Oh,
I own a lot of silver. But in any case, gold is at an all-time high, and if you know anything about stocks and charts, there's this indicator called relative strength index, and it basically says where is the price relative to itself over time, over the history of it. And it's a scale from 1 to 100. And gold on the monthly level is at 91.8. It's never been this high in the history of the gold price. So relative to its own price, it's the highest it's ever been, not just in a fiat level number, but relative to gold itself. So to me, this feels like a high in gold. And you can quote me on this. I think in a month, we're not going to be at 4,000.
So
I
are
don't.
you buying or selling?
I'm selling gold.
There you go.
I'm selling gold. And what am I buying?
Yeah, right.
I'm buying the best performing asset over the last 1, 5, and 15 years. Bitcoin. The best performing asset. Okay. Bitcoin here on the far left over the last year, it's appreciated. I think it's even better than 94% right now, but this was on Friday when we sort of had a flash crash. And we're back at 113,000 right now, I think, something like that. So we're at about doubled from the price it was last year. Over 5 years, you could have bought Bitcoin at under $10,000 5 years ago. So you're at 10x, you're at 1,000% gain over 5 years. And of course, if you look at 10 years, you're looking at like 10,000% or 100,000% or something crazy. So it's just the best performing asset because it is hard money and we're figuring this out. People are figuring this out. And the sooner you figure it out, the better off you'll be, I think. Okay. So this is against traditional finance, of course. Bitcoin just crushes everything. It just crushes it, crushes gold. There's no competition, really. And then this is to the point of what is the market capitalization of all the assets in the world. This is all the money in the world. All the assets basically is $1,000 trillion, or I think a term we're going to have to learn, $1 quadrillion. Okay, $1 quadrillion. That's a 1 with 16 zeros after it. That's the total wealth in the world. Most of the money is stored in our homes, in the land, in our buildings. That's where most of the wealth is stored. 370 trillion worth, bonds, 318. Money itself, money held in the bank, 29 trillion, equities, art, collectibles, and then gold. We're now up to in the last few weeks, we've gone up. We're now up to a $25 trillion market cap of gold. And Bitcoin's still only at $2 trillion. And if you think you're late to Bitcoin, take a look at this chart and think about how much money could leave these other assets and go into Bitcoin. Just take 5% of all the other assets in the world, put it into Bitcoin. What does that put Bitcoin at? Probably a 20 or $25 trillion asset, on par with gold. So a 10x from here. What's a 10x from here? We're looking at $1 million of Bitcoin. I'm not saying it's going to $1 million, but I can easily project that could happen. Okay. So this is not financial advice. I'm not a financial advisor. Do your own research. Disclaimer over. But
Mark told me about it.
exactly.
You don't happen to have a chart that shows like over time, over the past 10 years, how much the market cap of Bitcoin has grown, do you?
I don't.
Okay, because it would be interesting to know, like, is it growing at a pretty good clip, like, consistently, or does it shoot up and then?
Well, the compound annual growth rate of Bitcoin throughout its history is like 80% a year. But a lot of that had to do with the early years. But
Yeah,
the last 5 years, the compound annual growth rate is like 55% a year. Every year, that's on average how much Bitcoin grows. Some years it grows 100%. Other years it goes down 10%. But on average,
wasn't it 2019 that it was like 70,000 or something?
no.
Well, it was 70,000, and then before all the FTX stuff.
That was in late 2021. Yeah, late 2021.
Oh, okay.
Like November 2021.
So if you bought it in November 2021, then it hasn't. It's gone up, but not as much as if you bought it like
Right.
whatever.
So like the worst case scenario, you're like the worst trader in the world. Your timing is the
You
worst in the
bought
world.
like
You
at the
bought at
absolute high.
$72,000. Today you're at $113,000. You're up 50, 60% in 4 years. You're still up 50% overall in 4 years,
Yeah.
which is basically, it still beats the stock market, which only produces about 9% a year
Yeah, that's true.
historically, including dividends.
That's why you have to buy the dips. If you only knew at the time that.
Even Even if you're the worst trader in the world, you're the
Yeah, you
absolutely
got
most unlucky person in the
Maybe
world.
this is a dip. I don't know.
If you just hold Bitcoin and you don't do anything with it, you treat it like a pet rock, it'll work for you. Bitcoin works for you. You don't have to do anything with it.
Okay, but what's the point of that? So I hold it for 20 years, I'd miss out on all the fun I could have had with that money, you know?
That's always your choice. That's always your
It's there
choice.
tied up forever.
It's always your choice to spend your money. I'm not saying don't spend your money, but if you want to save your money, where's the best place to save your money?
Well, then we could talk about using your Bitcoin to get a loan, but that's a different topic.
Right.
Yeah. So here's someone.
Is that you?
You want to see? It's not me. This is just, again, this is a sort of a famous Bitcoin market analyst that I respect. His name is Tur Demeester. And he projects, we could have $1 million Bitcoin. When is the near time top? He says we could see this as soon as next year, $1 million of Bitcoin. This is what he said. Caveat emptor, do your own research. This is what he says.
100,000?
113,000. Yeah. Okay. So we have a long way to go. Here's another interesting chart. Here's Bitcoin related to gold. How much gold can you buy with 1 Bitcoin? This is what this chart represents. And so you can see over time, you're able to buy more and more gold with your Bitcoin. And I drew a trend line on the bottom right here that shows that we're steadily going up in the last 2.5 years. And right now, the price is right on that blue trend line, right at the bottom of it. And if that trend line holds, we should only go up from here at this particular point. That's why I'm a seller of gold here and a buyer of Bitcoin. I think that's the trade to make if you're a trader. Sell gold right now, buy Bitcoin. I think that's a really great opportunity. And that's what this chart is showing.
Not financial advice.
Not financial advice. But if you got coins like that, you might want to trade a couple of gold coins and get some Bitcoin. I think it's a great time to do that if you have gold, So something to think about. So just to sum up, Bitcoin is gold 2.0 in my opinion. We don't need trusted third parties. We don't need banks to keep track of who has money and who paid what and all that stuff, all that central bank. It's here to replace that. Bitcoin is not here to replace credit cards or Venmo or PayPal. We don't need payment rails. We're here to replace the central banking system with Bitcoin. That's what it was designed for. And all of gold's flaws are basically replaced, and we keep all of its beneficial aspects of it. It's a scarce, digital, bearer asset that translates into sound money for our future, bringing civilization back to sound money. So we want to bring the control of money back to us. And that's why ultimately it comes back to an issue of freedom, sovereignty, And how do we want to live? How do we want our children or our grandchildren to live? Do we want to have the government decide what is money, or do we want to decide what money is? Throughout history, people have always decided what money is, whether that's cows, whether that's wheat, shells, gold, silver, and now we can say we want it to be Bitcoin. And we don't have to pass a law. All you have to do is trade some of your wealth for Bitcoin and participate in the Bitcoin network. It's open to everybody in the world. Can I get an amen?
Amen.
Amen.
Thank you.